we've seen an increase in the correlation between bonds and equities in the last 2 or 3 months, right? So yields have been pretty much flat since February, and equities have benefited from this, kind of reflation trade and low interest rate, right? So you've seen the correlation moving higher between the two. So to some extent, the equity market is performing on the assumption that central banks are going to be very slow to react to the high inflation, and that the bond market is right to believe that inflation is transitory. So the risk to this view is that, well, inflation keeps surprising on the upside, and obviously central banks at some point have to react to it. So we will see tonight what happens. We do think the Fed has no reason to change kind of drastically their communication. We do believe that their assumption is still very much that inflation is transitory. But look, with a maturing recovery trade and the progress of the vaccination, etc., we do think the Fed should sound a bit more confident about the outlook and probably open the door to talking about tapering.
Now, I guess translating what you just said to the fall we've seen in bond yields in the last month or so, how would you interpret that fall in yields? Is it because investors are now coming round to the Fed's view that inflation is in fact going to prove transitory?
Yes, we've seen some sales news or sales inflation news in the bond market, which, honestly looks a bit surprising, right? So at the time where inflation is surprising the most in many years, we are seeing a fairly marked rally in bonds, right? So it looks a bit counterintuitive to see yields falling when inflation is actually surprising on the upside. So yes, the explanation must be that the bond market is buying into the kind of transitory inflation narrative and expect somewhat central banks to be reacting slowly to this kind of inflation rebound, right? So we had obviously the ECB last week reiterating their patience, their commitment to low rates. And so far, the fact is the Fed has been very, explicit about being patient and being, on wait and see mode as well, right? So I do think that, the next few months will be important, because if you see during summer inflation remaining high and at the same time the Fed starting to shift their communication towards a bit more balanced or optimistic growth and inflation outlook, there's something which, you could bring rates to the kind of top of the recent range, right? So we don't really believe yields falling should be extrapolated. There was a bit of short covering as well happening, but all of that, you can still get higher yields down the road, partly because the economy will be fairly robust in the second half, and we are getting closer to tapering in the US.